Today, on Governor Mervyn King's last policy meeting, the Bank of England kept interest rates on hold at 0.5% and left asset purchase at £375 billion. David Kern, chief economist at the British Chambers of Commerce, joins me on the line. David, what do you make of the decision?
Well, the decision was widely expected, and it was the correct decision. In fact, the interest rate decision was never in much doubt because, in the UK, most people in the market regard 0.5% as being, for all practical purposes, equal to zero. There was some doubt about the question of QE because in recent meetings, a number of members of the committee, in fact 3 members, including outgoing Governor King, have voted for a small increase in QE. But the pressure for QE is fading because the recent economic news has been relatively good. Forecasts have been upgraded. We have upgraded our forecast last week. This week, we have had good figures from the purchasing managers. The PMI survey has all reported better than expected figures. So the decision was widely expected and correct.
Do you think a cut should have been made, and would a cut have been a good move?
No, I don't think a cut should have been made. I don't think it was necessary. Neither do we need a decline in an increase in quantitative easing. I think policy must remain on hold. I think rates are low enough. Nobody expects them to go up anytime soon, but I think they should stay where they are. Similarly, the QE program should stay at $375 billion. And I think the new governor, Mark Carney, that comes in on the 1st of July and will chair the next meeting, should try to find ways of making a QE more effective. I think that the Bank of England, the MPC, should not focus entirely on gilts. They should change the composition of the assets they hold. They should hold more private sector assets, including securitized business loans, particularly from SMEs. And the whole aim of policy from now on must be to make more lending available to the private sector and buying private sector assets rather than just government stock, government bonds would be the right measure. I don't think we need more QE as a device to weaken the pound and to try to help exports this way, because I don't think it would work.
And how do you think markets and investors will react to the BOE decision?
I think for the markets it's virtually, I believe, a non-event. I mean, the big thing in the market this week was the positive numbers produced by the PMI, by the purchasing managers, particularly for services, because as soon as these numbers came out, which were better than expected, the pound rose, partly to signal that the earlier pressure for more QE has been fading.
How do you think the move will affect the strength of the pound against major currencies?
The decision itself, as I say, will have little effect, but because of other developments, particularly the better news on the economy, the downward pressure on the pound that we saw in previous weeks is now being reversed. But the decision itself will not have, in my view, any significant effect.
And where do you think the British economy is heading now? Are they on the way to economic recovery in the same way the US seems to be indicating they are?
Well, we are not doing as well as the US. I think that some of the earlier pessimism about the UK has been overdone. We are not talking about a booming economy, but we have avoided a triple dip recession, which many people feared. I never believed in it. I didn't think it's likely, but many people were concerned that we'll have it, and we avoided it. In fact, even the double dip recession that we had last year is probably going to be revised up when we get more figures from the official statisticians. It is still true that the economy is still too weak. We need more growth, But there has been an improvement because I think that the tempo of economic activity is gradually improving. I think that these news that we are now getting are not marvelous news. But some people became so despondent and so disappointed with earlier news that even a modest improvement is being seen as surprising. But it is to be widely expected that after such a long period of stagnation, we will feel an improvement in economic growth.
Lastly, David, when King's successor Mark Carney takes over at the start of July, do you think he will be capable of continuing to take the UK's economy into what appears to be resumed growth?
Well, I think that one has to be realistic. There are limits to what monetary policy can do, and there are certainly limits to what one individual can do. In the system of the UK, the governor is very influential, but he has only one vote on the monetary policy committee. So I don't think that one should expect big changes. But more importantly, I don't think that a more aggressive quantitative easing program, more aggressive expansionary policies will do the trick. I mean, we have a very expansionary monetary policy. We have very low interest rates. We have a very large program of QE, which we are maintaining at the existing level. So when these assets mature, they are not being run down. The Bank of England replaces them. But at the moment, we really have to focus more on the real economy, on the fact that not enough lending gets through to the private sector, particularly to growing businesses, and the main aim of policy must be in that direction. So in some way, it is good that today no change was made, and that we should be realistic about expecting the new governor to deliver growth. That is something that will take time. But the good news is that the economy is moving in the right direction.
That's all for now, but do check out my weekly wrap-up interview tomorrow reviewing this week's economic events. Stay tuned and goodbye for now.